for Future Retail, there are 11 analysts tracking the company, and 10 of them have a buy rating on the stock, while one has a hold rating. And the 12-month target price is close to 662 rupees, which suggests a return potential of 9%. And this is after the stock has given around 100% returns in the last 12 months. For Future Consumer, only 7 analysts track the stock. 6 of them have a buy rating, 1 has a hold rating. The 12-month target price is 79 rupees, which suggests a return potential of 33%. Then this is after the stock has given 75% returns in the last 12 months. And for Future Lifestyle, 8 analysts track the stock. All of them have a buy rating. The 12-month target price is at 495, which suggests a return potential of 13%. And in the last 12 months, the stock has given a return of close to 53%. So let's see why analysts are bullish about these 3 companies. For Future Retail, Future Retail has plans to expand its small store format, that is Easy Day, over the next 4 years. It plans to take the Easy Day stores count to around 5,000 stores by financial year 2022. And this aggressive expansion plan will be the major growth driver for the company. On the same store sales growth side, if you see for its flagship store, that is Big Bazaar, the same store sales growth has been good. For the last 4 years, it has been in double digit, and going forward, that is over FY18 to FY20, analysts are expecting this to be around 12 to 14%. So the double digit same store sales growth is expected from this company going forward also. And if you see, the company has now recently acquired Hypercity. Now currently Hypercity is loss making, but analysts expect the Hypercity stores to turn around by financial year 2020, thereby aiding Future Retail's performance. Now the 2 risks involved with Future Retail, one is if they are not able to turn around their low margin business, and second is if they are not able to manage this aggressive expansion plan that the company has. Now for Future Consumer, analysts derive confidence from the massive retail store strength that Future Retail has. Future Consumer generates nearly 80% of its revenue by selling its product to Future Retail. And along with this, the company also follows a prudent pricing strategy. The company's ad expense as a percentage of revenue is very small when compared to peers, which not only gives them a higher margin but also allows them to offer more discount to customers. And because of this higher margin, the company is expected to report profit for the very first time in financial year 2019. As you can see, right from FY13 to FY17, the company has been reporting losses, and in financial year 2018 also the company is expected to report loss. So the company is expected to turn around on a bottom line basis in FY19. Now the risk involved with Future Consumer is their over dependence on Future Retail. As I said, 80% of the revenue comes in from Future Retail. So any slowdown that we see in Future Retail will indirectly impact Future Consumer. Now if you see for Future Lifestyle, Future Lifestyle has seen steady expansion across segments in both its stores, that is Central and Brand Factory, and because of that the company has also seen steady growth in the same store sales growth for both the stores, that is Brand Factory and Central. Now for last 2 years, the same store sales growth has been in double digit for both its stores, and going forward also analysts are expecting it to be in double digit on the back of steady expansion, right product mix, and better inventory management. Now if you see, the company has around 60 brand factory stores, and the company has planned to expand it to around 120 stores by FY21. And why are they doing this? Because the company Brand Factory stores has not only a monopolistic status but also can achieve quick break-even, and on the back of that they have this aggressive expansion plan when it comes to Brand Factory. Lastly, the company has around 30 power brands, of which they have identified 6 power brands and 1 is an emerging power brands, and analysts believe that these power brands will drive future growth for the company and also will help the company fetch higher margins. However, on the flip side, any growth impact of these power brands will impact the company's growth rate going forward.
So this bullishness that analysts seem to have, is this restricted only to Future Group, or is it, does it for the entire sector as a whole?
So if you see company wise for Future Retail, its nearest competitor is Avenue Supermarts, that is D-Mart. Now on this, analysts are divided. 50% of analysts have a sell rating, and that is mainly because of the higher valuations that Avenue Supermart has, and not because of the growth, future limited growth that the company gives, but it's only because of the analysts, because of the demanding valuations of the company. For Future For the other company, that is Future Consumer, now only 7 analysts track this company. Now it is very small when compared to its peers like Hindustan Liver, Dabur, Marico, Britannia and Nestle, but none of them still now has a sell rating on Future Consumer. Lastly, for Future Lifestyle, all the analysts seem to be bullish about the sector. For Aditya Birla Fashion, if you see, all of them have a buy rating. For Shoppers Stop, none of them have a sell rating, and also for Westside, that is Trent, none of them have a sell rating.